But we offer the traditional Roth, SEP, simple, spousal and inherited, and solo K, and the health savings account can be self-directed too.
So I'm just kind of comparing it to the Canadian plans in my head. So a Roth IRA, trying to figure out which one is which. If you're going to put in like pre-taxed dollars, is that an IRA or is that the 401k, or is there a difference in the US?
Right. So pre-tax, in other words, the money has not yet been taxed.
Right.
That money goes into anything but a Roth. The Roth is after tax money.
Got it. Okay.
The pre-tax goes in. We have, I would say, 90% of what we have here is traditional IRAs. And the reason for that is most of the accounts we have are rollovers from an employer plan. So a pre-tax employer plan normally will roll over into a traditional IRA, same tax treatment.
Okay. Yeah, so the Canadian version of the IRA is called the tax-free savings account, TFSA. Okay. The advantage of the TFSA is there's no age limit on when I can start taking that money out. The disadvantage is I can only put it into publicly traded assets.
Oh.
So, but it's an interesting differentiation because it's, that not having that age limit, I think is great. But I'm limited. Like I can't buy, I can't buy notes with my TFSA.
Well, I think that has to do with risk. I think that maybe the regulators think there's too much risk in alternative assets, but I mean, tell me, is there risk in the stock market?
Absolutely.
There's some risk, so that's investing, right? Am I right?
Yeah.
So with IRAs, there's no cap what you can invest in. You can do almost any deal you choose to do that's legal, right? Any deal you want to do with someone else, lend money on deals, lend money on apartment buildings, or even start your own kind of business, right? You can do any of those things.
Well, no, it's not going to be your own business because you're disallowed to your IRA and you're not allowed to have, present benefit. It's all about saving for retirement, so you can have it later, but you're not going to take your IRA and invest in your own business. But yeah, everything else is right. So whenever an IRA is investing, it's always in either a debt or an equity position.
Could you get into like a checkbook IRA where?
Sure. So a checkbook IRA isn't a special kind of IRA. What it is an asset that the account buys. The retirement account will invest in a special purpose LLC. So the IRA is open with money. You have a third party create the LLC. Your IRA, buys the 100% of the initial units of that account. And then we fund the money, put the money into the checking account. Now you've got your IRA money, as the umbrella and the LLC under that retirement account umbrella. So it's an IRA owned LLC is also called a checkbook IRA. And it's not a gift with purchase. A lot of people, well, where's my checkbook? It's like, well, you have to have a third party create this and it has to have special language. That's what it is.
Stock market, I can move money like quickly. How long does it take for you guys to fund a deal typically?
That was
24 to 48 hours usually. Yeah, typically 24 to 48 hours. We're pretty quick. And yeah, so it's really good. I mean, as long as everything's all queued up and the money is cleared and then you're good to go.
And Dave asked that, and this, but Dave asked that because in the note world, it moves quickly. Like once you've got an accepted bid, usually, you might have a week to do your final due diligence. But there are then those other times where, okay, I need you to fund tomorrow, where due diligence is already done, and all right, we need to fund tomorrow. And
tomorrow.
Sorry about that.
With the self-directed IRA, if you want to talk about how long it takes, it's not going to happen tomorrow. You're not going to give us docs today and get it funded tomorrow. Typically, I mean, it happens, but I mean, we're going to under promise and over deliver on that one.
Sure.
And just say you got to give it a couple of days. But so coming from the real estate world myself and really having ingrained in my body that sense of urgency, that you have, and especially in residential real estate, it's crazy. People, everything is now.
Yeah.
So that's what I hire when I hire people for, on staff. They have real estate experience. They understand the sense of urgency, and then all of a sudden we're gonna do what we can to make things happen.
Yeah, that's a huge plus. I know And not all IRA companies are created equal in that sense, where some will take like a full week to get the money turned back out. And that can be a long time in a transaction setting.
Lose a deal.
And you could lose the deal.
Yeah.
And then there's others, if you can do it in 24, 48 hours, man, that's a huge plus.
Well, we're going to talk to you about the deal, and there are things that can hold up a deal for a week that have nothing to do with us, so we'll try to set your expectations up front the best that we know how, given the information we have available, but sometimes there are outside reasons that a deal can get held up too.
Mm-hmm. And then for anybody who's watching, where if you're doing a deal and the money is coming from, whether it's your own or somebody else's IRA, and the seller says, okay, we're going to close Friday, let them know the money's coming from an IRA, and just make sure that's up front so that there's an understanding that, it might take an extra day or two. And then
the seller understands that, but
Exactly.
if you don't say anything, the seller doesn't know.
Right. But if you say it and then they know that there's a potential delay there, it's fine. No big deal. It's not a problem.
Let me make a suggestion too to your listeners that you're a note investor, you need something happening, like, time is of the essence. Always request a wire. Never mark the box that says you want a check, because that check's going in the mail. Yeah. Unless you ask for overnight delivery, there's a fee for that. We pass on the fee that we get, but never check the box that you want to check if you're in a hurry. That's going to take longer.
All right. So we're kind of with the new kind of the beginner advice type stuff. Any ideas, like anything you can share about biggest mistakes that you've seen for like newer investors?
A couple of
common mistakes.
It's kind of funny, actually. I mean, since, knowing the industry as well as we do, but we saw somebody, by the way, who they wanted their IRA to buy a property. So they went to their bank to get a loan. So they're telling some mortgage loan officer, hey, I'm buying this house. Mm-hmm. So the loan officer's got this deal all queued up, ready to fund. And then no, an IRA doesn't take on regular Fannie Freddie conforming FHA, VA funding. So the poor loan officer who thought he had a deal that was going to close, didn't close, mm-hmm. because now this IRA account holder had to get a non-recourse loan. And by the way, if your listeners want a list of non-recourse lenders, we do have a list. I mean, it's not necessarily a list of people we recommend, but it's like for your convenience. So you can check them all out and see what you think. Sure. Because it has to be non-recourse money. So that is a real rookie mistake to think that your IRA could go to your regular bank, just like when you got the mortgage on your house, and get that kind of a loan for an IRA. You can't because it's disallowed.
Got it. All right. So, and then another area where different IRA companies differ is on their fees. Can you tell us about your fees?
Yeah, our fees, I mean, I think everybody really loves our fees. We have a flat fee, annual fee of $375, and that's regardless of the number of assets in your account and regardless of their value. It's not on a sliding scale, so it's a great fee. We have a $50 setup fee. It's a one-time setup fee when your account opens, that flat fee per year. And then the first 10 checks that come in per year have no cost. After 10, after 10, it's a $10 fee. So it's extremely reasonable. Our fees are very low for the industry. A $15 wire fee, it's like half of what most other companies charge. So, we're not going to fee you to death. Right.
You guys make money. How do you make money? How does an IRA company make money?
Yeah, I mean, it's obviously not on the fees, right? Right. We make money like all banks and trust companies make money, and that's on, on the deposits that are, the money that's on deposit, not on people's assets. We don't make money on, if your IRA invests in a house, we're not making anything on that house. But just like banks, how they've got the Fed funds rate and they earn interest overnight. So we earn money the same way any bank would.
Okay. So it's to your advantage to have people have a larger IRA. Is that accurate?
Yes, but I mean, it's nothing I have control over. People have the size IRA that they have. They're going to invest what they want to invest. We can't say, we're not going to do an ad campaign that says, put all your money here, but don't invest it. I mean, that's not in our account holders' best interest. Yeah. It just works out. It works out so that everybody wins.
Yeah. And as an IRA company, you can't recommend any specific investments or even vendors necessarily, but you can say, invest it. Go out and do something with it. Make your account bigger because we all win.
You know, you're so right. That is a real sticking point right now with the Department of Labor and just the lawmakers. They just want to make sure that we're not recommending any investments to our account holders because we're not advisory. And the minute we do that, we become what's called a fiduciary. And if you have that label on you as being a fiduciary, it comes with a lot of rules. So we stay out of that ballpark entirely.